It's still my central thesis that we have an unsustainable system of money because it's predicated on a math problem. That's what we're on. We're on an exponential doubling function. The Fed's balance sheet goes, 15, maybe 20 trillion on this next cycle. You ask, where does the next crisis arise? It's a credit event. It probably has something to do with sovereign credit at this point in time. We only have to resolve one question at this point in history, which is who is going to eat the losses. The stable coins to me, Paul, very clearly, those are a Trojan horse. Those are our CBDCs by any other name. We have to fix our system of money. Yeah. That's it. I don't think it's possible to have a non-corrupt society architected on a corrupt system of money. People's instincts are fired up now, Paul. They know something. The most common thing I hear from people is, Chris, I think there's another shoe about to drop.
Hello everybody, Paul Buitink here for Reinvent Money, a podcast about money and power. Today, joining the show for the first time is economic researcher and futurist Chris Martenson of Peak Prosperity. Chris and his company help people build resilience to better face the big predicaments of our times. He's also known for his crash course and his critical work during COVID times. Hi Chris, how are you?
Paul, good to be here. It's been a long time. We should do this every 13 years or so, I say.
Yeah, we realized we saw each other 13 years ago in Madrid at an event. And now we're here in 2025. We should definitely talk more often than every 13 years. That's crazy.
Let's do it. Let's do it. Yes.
Yeah. Well, so I remember back in the day, you were very much focused, of course, on energy and oil. And now you're more a generalist, I think, with the grand focus on how one should prepare for, like I said in the intro, for the big predicaments of our times and all the change that is coming. Today we'll focus on the financial system, but I would love to get your more overall take of where we're going as a society and how one can prepare for what's coming.
Well, so the basic thesis that I had, which still has oil at the center of it, or energy more accurately, is that for whatever sets of reasons, and we can say they're good or bad, we humans built a money system that was based on infinite exponential growth, right? That's our debt-based money system. And you just peel back the economic covers and you look in the banking system, and you will always find there's mountains of debt and very little money or cash sitting under that, right? So in the US, M2 is maybe 20 trillion, but total debt in the system is 100 plus trillion. So how does that square? Well, only if it keeps growing, baby. That's the whole thing is predicated on just grow. And that's fine, unless you understand that growth requires resources. And then you wander over to the resource story and you say, do those resources exist to have this carry on forever? And the answer is no, right? Obviously. So that helps me understand and explain everything that's going on in the world. If you want to understand US-China relations, you have to have the resource lens as part of that. Middle East, oil, obviously, things like that. So it's still my central thesis that we have an unsustainable system of money because it's predicated on a math problem. It has an ending date. There's no squaring that circle. We've watched Elon Musk, like he has an engineer's mind. He just took one look at it and said, this doesn't work, right? And when it doesn't work, then you have to come to other conclusions, which is like, okay, if the money system breaks, that's bad, comprehensively bad. So what would we do to prepare for that? And then that gets me into that side of the conversation.
Right, because you've correctly predicted a 28 crisis, which they then try to solve with more debt and lower interest rates, basically the same cure they always try to apply. But at some point, that cure doesn't work anymore. How close are we to another 2008-like financial crisis, and where would it manifest itself first, you think?
Yeah, so 2008 fundamentally was it was a derivative-born crisis, right? We had a lot of bets based on housing, collateralized debt obligations, blah, blah, all this stuff. Watch the movie The Big Short. Does a great job, right?
Yeah.
But it was just people got a little insane and made bets that could never be paid back. And of course, it started to break, and then it scared the system being Hank Paulson and other bankers, right? And so they bailed the whole thing out with more money printing. And it didn't stop there. We had another bailout in 2011, then in 2013, then in 15, 17, 19, 2019, few people remember this, maybe you do. Things were popping again. Remember we had the repo overnight market? Yeah, started to break 10% rates from normally 1% at that time. So at any rate, we've had these crises over and over again. So my model for this, Paul, is very simply, you're in a car and you hit a patch of ice. And so you're slewing a little bit. So you steer and then you oversteer and the car starts to whip the other way. That first little correction was 1987. We had a market crash. Alan Greenspan rode in with the Fed put. He made sure that, the market was stable. We had another course correction too. 1994, there was a corporate bond market. Alan Greenspan took away reserve requirements with this fancy thing called the sweep program. Anyway, banks were unbridled from having to have any sort of tether on how much they would loan. And there was this crazy thing called the internet coming. Then we had the long-term capital management. Now they're steering the other way. Then there was 2000, and we got the Ben Bernanke's 1% blowout rates. And then 2007, 8 happened, and then we steered the other way, the great financial crisis. And it's just gotten bigger and bigger. So COVID happens in the aftermath of the September repo crisis, right? Perfect timing. And next thing you know, if you look at this, look at it from the Fed standpoint, the balance sheet went from maybe, 300 billion at 1987. It just about almost somewhere between 2 and 3x increased at the great financial crisis. Then it wobbled up another 2x over all those little crises. Then COVID, it doubled again from about 4.5 to 9 trillion. So my model for this is very simple. Yes, there's going to be another 2008 crisis. It's going to cause the Fed emergency to have to do a lot of printing. And it's going to cause its balance sheet to have to double again, because that's what we're on. We're on an exponential doubling function. The Fed's balance sheet goes, 15, maybe 20 trillion on this next cycle. That's what's going to happen.
Yeah, because right now it's like 7 trillion or so, right? More or less, a little bit less, I guess.
Yeah, a little less. Yep.
Yeah. So you expect it to go to 15, 20 when the next crisis comes.
Yep. And there'll be some name for it. We know that our municipal bond market is completely toast over here because it's based on pretty fraudulent real estate valuations that just doesn't work out. And they've got way too much debt in most locations. It can never be paid back. We also know that, like we're watching right now as this is being recorded, the 30-year, the long bonds, the UK, Europe, Japan, US, they're all starting to pop, right? So for whatever reason, investors have decided we don't really want to hold long debt. And I'm saying this because you asked, where does the next crisis arise? It's a credit event. It probably has something to do with sovereign credit at this point in time. Because if you remember, let's rewind. 2019, we also saw something remarkable, which was $18 trillion of negative yielding debt in the world's markets. That means I have to pay you money so you'll borrow money from me, right? It's a crazy concept. So now we know, of course, long-term interest rates are much higher than that. So there's trillions of losses. Where are they? Somebody's sitting on them. We know they're there because somebody owned $18 trillion of negative yielding debt. And today interest rates are 2, 3, 4%, depending where we're talking about. So where's that? So those are the kinds of losses when we say, what would the Fed possibly need to double its balance sheet on? It's going to be something that smells a lot like that to me, a big credit crisis.
Yeah, but then they will be able to paper over this problem again. So how will this, can they continue doing that? With the next crisis, they will double again. So in that sense, they're able to keep the thing afloat for much longer than maybe you and I were expecting.
Oh, absolutely. I mean, this should be simple to resolve with math. In fact, it's fun. You can go into like Grok, even Grok 2 could resolve this. You just go in and ask it logical, rational questions, and it gets right to the same conclusion we're talking about right now. It's that humans are able to perpetuate this fantasy a bit longer. But strictly rationally speaking, everybody knows that who can think rationally about this and can do simple math, that this system does not have any good conclusion. There's no combination of growth plus stimulus. That we only have to resolve one question at this point in history, which is who is going to eat the losses. Yeah. The usual bankers are like, not us, and politicians, not us. And so they want it to be the citizens. So when you ask, what's the stopping point to this? Nothing stops the Fed from doubling its balance sheet and then doubling it again and then doubling it again. But in 1987, when Greenspan started us down this path, old mumble sticks himself, you could still work at minimum wage and sort of get by. And then by the time they'd done the second bailout, you couldn't really do that anymore. And now we're up to the point where, anecdote time, Nick, who works with me, right? His daughter, 16, took every driving course possible, got all the right grades, perfect record, everything. In rural Georgia, her first year quote, the cheapest they could find for auto insurance was $4,650 for the year.
Sure. Crazy.
Boys are well over $5,000. See, so this, where did that come from, right? Nobody can answer. The insurance companies won't respond. They're just like, oh, but those are what the rates are. We're competitive with everybody else. But what they won't tell you, Paul, is that the reason they have to jack rates up like that is because they are hemorrhaging money on the back end on their investment portfolio. Those are the owners of some of those 19 trillion, 18 trillion of negative debt. Those are the owners of about 1.1 trillion in commercial mortgage-backed securities that are also on fire right now.
But then a new insurance company could be started to offer better rates, right? The company who doesn't have the legacy debt can start with a clean balance sheet and come up with competitive premiums, because it sounds like a market opportunity for me.
It does, but there are structural impediments to that. We don't have capitalism in this country. People argue about it. The regulatory barriers to starting a company like that are exceedingly high. Right. So it would be pretty hard to get done.
Yeah. Okay, and so in the end, it's the people paying through inflation, and that inflation can become so high at some point that people will take to the streets and demand a structural reform or different monetary system or whatever. But that's so unlike previous times. This time there's not a lot of room to maneuver, and people could get angry real fast if inflation becomes too high. Just like in the previous time, 2022, of course, it already led to a lot of issues, but this time it will be more severe, you say?
Yeah. So pre-COVID, February 2020, if you had $100,000 of income, today officially you need $126,000 of income to have the same income. Just in that, it's one of the most stiff periods of official inflation. Unofficially, we all know inflation was actually much higher than that. So pick a different number, 130, 35, 40, 50, whatever. But it's a lot. And I now know, and I get anecdotes all the time from people who say they're struggling at that $100,000 mark even. And this next Fed printing, people will struggle at the 200,000 mark or 300. And they're just chewing their way up the socioeconomic ladder. And there's some magic point in there that you can't calculate where it boils over, right? But we're already seeing that politically, right? In New York City, people are about to elect a communist mayor. Because what else are they going to do? I mean, to me, that's a reaction to people saying, let's just try something else. And I'm not saying it's the right thing, but you get political repercussions from things like this. You get institutional turmoil, and eventually people just revolt and do things like stop paying their taxes or stop paying their mortgages. There just comes a breaking point when these things happen. And I think that's what we can all feel. There's like a lot of tension in the air.
Yeah, and not only in the US, of course, but in Europe, the same thing. I'm also still surprised how long the euro, for example, lasts. I mean, the foundation is just so bad. It should have led to more convergence, but in the end, the countries are diverging, and there's a lot of internal strife as well. So it's sort of a race where I'm worried about the dollar, but I'm just as much think the euro could go down first. Of course, the euro has been strengthening this year, and then the dollar, because of everything that's going on and all the policies of Trump has tanked basically. But I think in the long run, the dollar probably has more life ahead than the euro. How do you look at the euro?
I look at all the fiat currencies as mismanaged just to different degrees. I'm a big advocate of hard assets at this point in time, because you say, the dollar's down 11% against the euro. Well, they're both down against gold enormously in the past 12, 24 months, right? And so that's how I'm starting to look at this. We're seeing there's a huge geopolitical change going on. Honestly, Paul, everything to me fired off or got put on steroids in February of 2022, when under the Biden administration, they decided to weaponize the sovereign reserves of Russia, right? Think what you will of that, right or wrong politically. I'm just saying from an economic and a financial standpoint, that was a depth charge. Definitely. And it really caused, I think rightly, a lot of countries to say, I either do what the US wants, or if it gets mad at me, it will seize my dollar reserves. I better not have as many dollar reserves. So that's when we saw gold depart completely from all these charts that I've been in gold since 2001. I know the charts intimately, right? Gold against the 10-year yield inverted, against real rates, against you name it, the dollar. Normally it has super high correlations. And then in 2022, those charts just broke, never to look back. And there's something afoot. And then we have all these rumors that, of course, that the BRICS countries were thinking of backing, at least partially, a BRICS currency with gold, something they called the unit. Trump came out and warned them that if they did that, it's a declaration of war, and on and on. So there's a huge changing of the guard going on out there internationally with China at the center of the BRICS and the United States trying to sort of keep the Western coalition back together. And that's the big tension we're seeing. So I don't really pay a lot of attention to the euro to the dollar ratio. I care about both of those to what I'll consider to be the only international currency we currently have, which is gold.
Yeah. And how do you look at these initiatives in the US and some of these legislation like the Genius Act and the Stable Act, where it seems like the US, Trump, Bessent, they really want to use stablecoins in the future as a venue to dump treasuries on, like as a way to basically keep on kicking the can down the road and preserve dollar dominance. How do you look at that?
The math doesn't really math for me all that much because there's only so many treasuries you can issue against a demand for goods and services, right? Whether you call it a stable coin or a dollar, it's kind of irrelevant. So the stable coins to me, Paul, very clearly, those are a Trojan horse. Those are CBDCs by any other name. They are a trackable, programmable currency. And as soon as you get that, you start going down this other thing. So here's my larger view. Ready? I can do this, you can do this, and there's people just as gifted as us out there too at the WEF and other places like that, where you can go, wow, there's just not enough resources to sort of keep this whole thing growing like it has been. So what do we do? And obviously you want people living in 15-minute cities and living on a universal basic income and not traveling all that much because they're worried about their carbon impact or footprint or whatever. There's this whole story that basically sums up to, how do we take a big chunk of our people and basically take them offline so they're not in the game? That's what a stable coin is. It's a perfect way to do that kind of stuff. And you build beautiful little cities and you give people AI robots to have interactions with. And anyway, they're out of the game. But if you understand where we are in the actual resource story, this next period of time, which we'll call the next few years, a lot of things are going to shake out. I truly believe the world's going to break into different regions. North America is one. Remember, Trump comes in office, first thing he does, he's like, Greenland, 51st state, Canada. Yeah. He's basically saying this is our footprint here. And I don't disagree with that because we can't compete with China anymore. They will outcompete us industrially if we ever got into an actual, God forbid, shooting war, right? They have missile technology that's now more advanced than ours. We can't fight China for what we want anymore. Worse, they can walk to the Middle East. Worse, they just built a train line that takes them from Shanghai to Tehran, right? So they're belt and roading their way across resource areas. North America is our resource area. I see things starting to break that way. I don't know where that leaves Europe, to be honest.
Yeah, stuck in the middle. So we have North America, South America as a block too. You think they'll be able to unite?
Yeah, well, China has huge inroads into South America, so right. I'm a little unclear how that plays out. Hemispherically, I would think the United States would consider that its territory. But it's unclear how that'll play out because the United States has sort of a, let's say, unpleasant history with some of the peoples in that region. And I see, the United States is gunboat diplomacy, do what we say or we bomb you. And China, I'm not saying it's right or wrong or anything, but they practice checkbook diplomacy. And I've watched them operate that all over the world.
Yeah, and given Trump's desire to, in a way, isolate the North of America to focus on that bloc, and given the rise of China, but also the conflict in Ukraine, what would be a sensible policy for Europe, or maybe more specifically for certain nation states? Like in my example, for example, I live in the Netherlands, small country, very dependent on other countries, trading hub. What would be a right strategy for our prime minister if you would have that job?
The number one thing that Europe, its biggest problem is that it's shot itself in both feet with energy.
Right?
Yeah. allowing the Nord Stream pipeline to be blown up and staying mum about that. And I think we all know who did that. And then also watching the Brussels politicians further isolate Russia, which, like it or not, pipeline gas is the cheapest, best gas. You can't actually replace it with LNG. The reason is that LNG is just more expensive, a lot more expensive, right? Instead of like maybe $3-4 a therm, you're going to pay 14-15. It just doesn't pencil out, right? So more expensive energy leads to less prosperity for the people every time. And we now know that wind and solar are bit players, that they can't be the lead actress in the play. They have supporting lines that can come in at nice times, but that's it, right? So the question is, what's baseload? And if Europe was going to really do the best it could, it would go all in on nuclear as fast as possible, right? Because honestly, it's the best, lowest cost, and honestly, it's the safest of all possible energy sources that we could have. And
but not when there's war,
generation.
Right? It's a liability when there's war. It's kind of you see all the stress around Zaporizhzhia facility. So when you have a nuclear facility and you're also in the midst of a war, it may not be the smartest thing to have, right?
Well, that would be an odd thing. Maybe I would hope we could move past the war thing, because here's where we are in the energy story, Paul. We can't have. Here's the prediction: the next big war we fight, stuff gets blown up, it stays blown up. We won't have the energy necessary to even rebuild it, right? That's where we are in the story. We have to be really clear-eyed about this. The United States EIA, which is our Energy Information Agency under the DOJ, just for the first time, finally, recognized that shale is at its peak, and they've officially announced it. They said 2026 is going to be flat output, and then it wobbles down forever from there, right? That is a huge, giant moment, right? Shale took that story and delayed it about 15 years, but turned out to be a flash in the pan, because 15 years isn't all that much, right? Gawar Field was drilled in the 40s. It's still pumping like crazy. Like, shale is a much faster flash in the pan. It's not insignificant, but it's not forever. And so now that we're at peak oil, that's going to change things, which is why we need Canada on board, because they got a huge deposit up there. I'll bet you anything we'll start making nice with Venezuela, because they've also got a big deposit. I don't know how Greenland fits into this, but who knows? So, but that's what we're going to have to do. Europe needs to get its energy situation sorted out really fast, because, and this is, I hate to say this, you can't trust my country. We promised we were going to ship all this LNG. Someday we don't have enough of our own natural gas for our own purposes, and we'll just violate those contracts, because that's kind of how we've been of late.
Yeah, but also, like you said earlier already, you alluded to the fact that the US most likely was behind the Nord Stream attack, or at least they condoned it, or they allowed it to happen. So from that moment, to me, it was very clear that the US is not a reliable partner anymore. So you need to, but that's a bit of the conundrum with Europe. Also, when I talk to guys like John Mearsheimer about it, they understand that, they see that, so they say, so Europe needs to unite, but they don't live here. They don't see how difficult that is as well, because we're just there's so many different cultures and languages in one area. It's not as easy as people outside of Europe think. And there's constant strife, and we cannot agree on anything. And when push comes to shove, we always let national interests prevail. But then again, we sort of need to unite in order to form a fist and to have a cloud versus China, the US, etc. But it's almost like there's no solution for us in Europe, it seems. My solution would be, now let's just try to focus as much as we can on becoming stronger sovereign states again ourselves, trade with each other, but focus on peace, diplomacy and trade, but not try to be this political union in order to form a counterweight against all the other powers, but just be different, be diverse, focus on other things than becoming a main power.
That sounds reasonable. And also maybe look into dialing back the regulations just a little bit, right?
Exactly. Yeah.
That
would be welcome. Yeah. So what is like one of those things that people don't really see, things that don't get a lot of attention? For example, in the financial system, we always look at debt levels, interest. And Musk, of course, is saying it's not sustainable. We also hear the UK budget office saying that the debt position is unsustainable. But what are sort of more things do you look at that people don't really look at, but that could be trigger points?
Well, so Here we have to talk about something really wonky for a second, which is market structure. So the markets that I kind of grew up learning and trading under are not the ones we have today, right? So if you looked at the plumbing of, say, Wall Street or London, it's a giant morass of piping now, right? And, we've got these OTCs and derivatives are trading trillions a day. And to clear a trade requires this, and there's a settlement system, and there's all this stuff. And it's just lots and lots of things. The point is that system is like a shark swimming through water. It's either unfrozen and working, or it could threaten to freeze. And that's a bad thing, right? So I think you had David Rogers Webb on. I've talked to him as well, right? And he talks about the great taking, which is the legal machinery has been installed just in case that plumbing freezes up. How do you get it unfrozen again? Well, they just take what they have to keep things moving again. And so the thing that most people aren't talking about is that we really have a binary market structure right now. So that's lesson one. It's this big, hyper complicated thing that's so complex, I submit to you, nobody actually knows how it works anymore. So when I was doing my great taking research, I talked to people who knew about this piece of piping, or somebody who knew about that box. I could never find anybody who could sort of synthesize it all for me, right? Because I think it's too much.
Yeah,
right?
There's maybe 10 people worldwide or so that have a full grasp of the system.
Yeah, perhaps, if anybody does, right? And maybe AI could do that because it's good at complex pattern recognition. But so you have that, and it has to operate. The second observation that goes with that, which I've been screaming from the rooftops for about a year or two, is that all the markets trade in lockstep now. And I can't explain why. So if you watch the futures market and you pull up all the indices, you've got the German DAX, you've got the FTSE, you've got the CAC, you've got the Nikkei, the Dow, the Russell, doesn't matter. Small caps, large caps, tech, Japan, France, Germany, doesn't matter. They trade tick for tick, right?
Yeah.
So that just tells us that we have a global financial capital system right now. So when you ask what's something that could cause something to go haywire, well, if it turns out that the Japanese market is so intimately tied in capital flows with the German market in the US markets, if something happened in the Japanese market, does it just suddenly disconnect from these other ones? Or like, how does it feels like all the piping is now a global piping system?
Yeah.
And so it's kind of like we're in a big ship, but it doesn't have bulkheads anymore. There's like, if there's a fire in the engine room, there's no like walls to prevent it from like going to the rest of the ship. So that's a concern I have. And I think our regulators have allowed that to happen. They've allowed high frequency traders to be 90% of the system. They've allowed all these things to happen. But what we don't have is an effective way of stopping a fire if it gets started.
Yeah. So that would be a good thing in a way. Then if we break up in blocks, at least the financial system would be more decentralized and in that way more resilient compared to what we have right now.
I love decentralized for everything. Money, power production, markets, they ought to operate independently because that is more resilient. Well said.
Yeah, it's interesting to talk a bit more about your company because you also really focus on resilience and to be self-sustainable. You yourself have a homestead, I believe. What kind of what's your vision for a sustainable future, and what kind of societal and systemic changes would need to happen to get there?
Well, everything begins with the main thing. If I had like somebody said, "Okay, Chris, one sentence, what's this all about?" It's that we have to fix our system of money.
Yeah.
That's it. I don't think it's possible to have a non-corrupt society architected on a corrupt system of money. And
it's the blood, right? It's the blood of our body. If the blood is bad, we can't function.
Correct. Yeah. So, and why is it a corrupt system of money? Well, because you or I have to expend life energy to accumulate more of it, take risks, do things, and other people just print it out of thin air as much as they want and give it to their friends, right? It's corrupt, right? And it's a corrupting influence, right? And, it's in the Bible in Timothy, right? For the love of money is the root of all evil. Well, if you love a corrupt system of money, it's evil on steroids, right? So it's a problem. So I think we're going to have a huge monetary accident at some point. I don't know when, right? But it's coming. And so the solution for that is to step aside as much as you can. And so I have a homestead, like just outside the walls, there's 6 cows and 30 chickens and fruit trees and all that, right? And it's a bucolic life and I like it. So does my partner, Evie. However, those are real assets. I own trees, which is BTUs on the hoof, gold and silver and oil and things like that. Because at the end of the day, those things will always have value, always, right? No matter how bad the economy gets, if the dollar completely tanks or the euro completely tanks, there'll still be an economy. And so the point of resilience is to figure out how you can be as insulated as possible. And we talk about home, health, wealth, and community, 4 big areas, right? And so for the home, I mentioned, okay, maybe learn how to grow a little food, or, have a plan B or something like that. Great. Health, that's obvious that everybody needs their health. Wealth, now you're going to have to get a little more creative, right? Because there's a game. You got to play the game because we all have taxes and cash flows and things. And know where we are in the game and play as defensive as you can while not taking yourself completely out of the game. It's a huge balancing act, and it shifts all the time. And then community is actually the most important thing, which is, how you and I, Paul, we're going to fare in this next future. Even though I've got like cows and chickens, I'm only going to fare as well as my community, right?
Yeah.
So if my community goes completely crazy, I'm in trouble, right? So really, it's. I don't think anything our great grandfathers and mothers would be at all surprised by, but we have a very, very hyper connected, just in time global system of delivery and dependency that if it breaks, we have the least skilled workforce ever, and when it comes to taking care of their own needs.
Yeah, that's also my worry. People lack actionable skills. So what would be like the one piece of advice you would give someone who's just starting to explore some of these things? What's the one thing that they need to do first tomorrow?
The very first thing is, so Maslow's hierarchy of needs talks about what we need as organisms. It's a pyramid. The very bottom row of that pyramid is your physiological needs, right? It's warmth, water, shelter, food, safety, right? If you're just waking up and you're like, gosh, I should be a little more resilient, you got to figure out what your answer is to those things. Because if you don't, here's what happens. People are like, oh no, I don't want to think about that. You can't not think about it. You have a brain stem that's constantly like chewing on the idea, even when you're not consciously thinking about it, that you're not safe, right? We have good instincts for these things. I think people's instincts are fired up now, Paul. They know something. The most common thing I hear from people is, Chris, I think there's another shoe about to drop. Well, maybe there will, maybe there won't. But the only thing you can do about that is to take actions to insulate yourself a little bit. So it doesn't have to be a lot. You could get a little food set aside. You could understand how you would store water. You would, just take some basic steps. And the thing is, Paul, people report after doing that big resistance because they don't want to do it because it's kind of admitting on some level that they have to. It's a psychological barrier.
Yeah.
But once they do it, they go, I feel better, It's actually good. And once you have that anxiety down, now you can make clearer decisions about other things you might need to do, such as what am I going to do financially, right? But you got to get that, you can't have that tunnel vision of anxiety. And a lot of people have that. So I'm like, well, you can't unknow stuff. Can't take the blue pill, not an option in this movie, right? You gotta do something.
And people suffer from paralysis at first, right? Because they think that they start to understand these things and they start to think about it more and more and every night and every day. But if you don't turn that into action, then you keep on just going crazy and it doesn't give you peace of mind. Once you've started preparing yourself, and of course, it's still a crazy world out there, but at least your anxiety goes down.
Yeah.
And you can try to live a happy life.
Yeah, guilty secret. I sleep really well at night. I'm fine. I won't like it if the world breaks, but I don't worry about it. But I've taken a lot of steps over the past 20 years now to get to this point. So the second thing I would advise people is just get started. It takes time, right? Because if you think, oh, I'll wait until it's really clear that I need to do something, then welcome to the world where a million other people are thinking the same thought. Yeah. And good luck finding anything, right?
It's better to be a few years too early than a few seconds too late, right?
Exactly right. Exactly right.
Well, good talking to you, Chris, after all these years. Where can people find more about Peak Prosperity?
Thepeakprosperity.com is the main website. And we have a subscription service there. And also I've got a lot of free content. So, choose your own adventure. And then at Chris Martenson on Twitter or X, I'm there all the time. Peak Prosperity on YouTube. So it should be easy. As long as you spell my name right, I'll pop right up.
I'll put all the links in the show notes, and let me know when next time you're back in Europe, and see we can meet up.
Likewise, if you're over
catch
this
up
way.
in person.
All right.
Yeah, for sure.
Yeah.
Well, thanks so much, Chris, and talk to you again.
Okay, my pleasure.